talk about what's happening in the banking world. And we've got Mr. N. Kamakodi, the MD and CEO at City Union Bank, joining in on the show right now to talk about their business. Mr. Kamakodi, great to have you today on ET Now. Thank you so much for your time. Help us understand how business and demand environment is on ground right now.
Yeah, overall, we are able to see, good growth or reasonable traction across all segments, be it deposits, be it advances across all segments. Particularly, as you all know, our focus is mainly on the msmE, commercial trading, agriculture, including the gold loan, and we are able to see traction uniform in a stable way across all segments. This is what we have seen, and last couple of quarters have gone well, and we hope that we should be having reasonable growth for the second half of the year also.
Mr. Kamakodi, hi, good morning. This is Harsha. Give us a sense as to how growth is going to evolve for you. You've done 18% in Q2. Tell us whether that traction is holding up for you, and how confident are you? Because you've guided for 18% growth, you've already done it. Does that mean you might surprise on the upside where FY26 is concerned?
See, actually, we have not, guided that way. As we had never been an aggressive growth player always. We had always been a defensive player with caution whenever we grow, and we always keep about 2 to 3% over and above the growth rate of the industry is what we have always maintained, and we hope for the current year, for the financial year 26, the sector is expected to have about 10 to 12% growth, and 2 to 3% is what we have grown. But if we come across opportunities to grow beyond that with our risk appetite in matching with what we get, we will be able to grow probably 1 or 2% over and above that. And so far, we have been able to see traction, particularly on be it gold loan, be it agricultural gold loan or consumption gold loan or other sectors also. We are able to see a steady growth opportunities available, and we are taking care of that.
Right. Mr. Kamakodi, you got a credit rating upgrade as well as of yesterday. Tell me what's the impact on the cost of funds and whether one can foresee margin improvement soon.
See, as we had always maintained, we had been a slow and steady player, and we had, always a test match player. Being at the crease is far more important than a T20 player hitting sixes and all. So, across all fronts, for example, even if you take capital raising, we had not consumed capital in an aggressive way, and we had not gone for a big capital raising through rights issue or whatever for the past 10 years. Similarly, even if you look into the rating thing, the same AA minus was there for close to a decade, and after continuous performance and stability, whatever we have shown, we have happy to share with you the upgrade in the rating. And it gradually, these things will be getting reflected in the cost of funds, and I don't see to have immediate a share that will be having significant reduction in the thing and all. It's only an reflection of what has already happened, and whatever advantages we are already seeing in terms of reduction in the cost of funds, as you might have seen in our cost of funds gradually coming down along with the interest rate cycle in the for the past 2 to 3 quarters. But definitely it is going to help us in a long term to see we getting into the next league in a steady fashion, and we will be able to demonstrate the performance and stability as we move forward.
Excellent. Mr. Kamakodi, give us a sense on the margin number. The margins have gone up by around 2 bips on a QOQ basis, if I'm not wrong. 3.63% is where you're currently at with regard to margins. Do you see any? I know that it's within your guided band, so it's not going to materially go up, but could there be a margin surprise? CRR has been cut. You likely have bottomed with regard to margins. Could there be a surprise for FY26?
See, the how we look at these things is that always whenever we, as you said, we had guided a band and we are able to achieve that in the band. some of these things are very difficult to let's say on a guide on a daily basis or a day-to-day basis. And when we make a guidance, at least we try to stick there for a quarter. At least we try to review that along with our quarterly performance call, with which we used to take it for the next quarter. So I don't want to promise anything at this point of time. But definitely, the things are we are having tailwinds, as you rightly said. The CRR cut will definitely help us to have a slight increase our CD ratio, which could also be a parameter. But you also need to take into account, whether you are going to have a rate cut, which will be affecting the yields on advances immediately, but will take larger time for the cost of deposits to stabilize. So just to sum up, we hope we should be able to be there in the range we have guided in the past in a stable way is what we are expecting at this point of time.
And Mr. Kamakodi, any surprises with regard to asset quality now, or are we behind on that count? And how are recoveries playing out? Give us a sense of that.
You can't always have surprises done. It will not be a surprise. Like say only when you see what's happening. Like as you have seen, almost for the last more than 10 quarters or so, the recoveries had been over and above the slippage numbers, and that has helped us to have both our gross and net NPA coming down in a significant way, coming below net NPA coming below 1% after a decade or so. And 10 years back, we took a call to keep it above 1% so that we will be having some elbow room to operate on the credit cost. But looking into the industry scenario and expected other ECL and other factors which are expected in the industry, so we decided to have that, and incrementally we are able to see our net NPA coming down, and we hope this trend will continue for a few more quarters, before which it is stabilizing, because by that time we would have recovered almost all maximum portion of the recoverable NPAs, after which the thing should be stabilizing, and we should see the NPA numbers continuing with the same trend as we have been seeing in the past 8 to 10 quarters.
Okay, good luck with that, Mr. Kamakodi, and thank you so much for